Hello and welcome to another edition of the Smart Investor Market Update for July 15th, Wednesday, July 15, 2015. And today we're going to take a look at the markets, what's happening in the markets. We have a very interesting situation in the gold market that we have been speaking about over the last couple of months, and the market is actually breaking down, and we are going to analyze the gold market. We're also going to speak briefly about Janet Yellen's testimony and what my thoughts are on it. Are the Not just the testimony, but actually analyzing the economy. And actually, let's start with that. And we had some interesting talking points and some interesting analysis from the Fed chairman. And I always get the question, what do you think of the economy, and what do you think of what will happen with the US dollar, with the stock market, etc., etc. Now, my approach is that analyzing the economy and actually investing in the markets is two different things. And investors, I feel, often get confused to think that if you are able to analyze the economy, then you will become a good investor. And that is definitely not the case, because most economists aren't good traders, aren't good investors, and can't make any money in the markets. Because when you make a economic prediction, you will then buy a group of stocks or a group of markets, and then what happens if that prediction doesn't work out? While our investing method, it's all about looking at the market, looking at the price action in the market, and then responding to what the prices are telling us. So if the prices are telling us that the stock market is going up, we are buying the stock market. If the prices are telling us that the euro or the US dollar is going up, then we are buying the US dollar. So we don't enter the markets with any preconceived notions or stick to any predictions. And that's why we're so successful here at Smart Investor Central. Okay, so looking at the S&P 500, what is happening is that we are in a channel consolidation. And for those of you who want to actually see that chart analysis, you can go to smartinvestorcentral.com and go to market updates, and you'll see a video analysis of what we're speaking about. But we are in a channel consolidation, and we started the year pretty much just about the start of the year at, I'm getting the exact level. We started the year at 2060, and we are now at 2113 in the S&P 500. Pretty much stagnant. The market has been in a consolidation pattern ever since the start of the year, and that's why maybe many of you investments, you haven't really seen much movement if it's tracking the market, because the market is not really doing that much. It's in a holding pattern. Now, the all-time high that was made in S&P 500 was made in mid-May, near that 2134 level, and the market is now approaching that all-time high. What we're looking out for, and as an analyst, what I'm looking for is to see how the market reacts around this all-time high. If we get a rejection of this high and the market starts to head back down, the next area of great interest for us is this 2040 level. And because if the market breaks below the 2040 level, that could issue further selling in the market. Remember, large money players are the ones that drive prices in the market. And if they see some of these levels broken, then they are going to issue automatic sell signals. So we are at a very critical point in the S&P 500, and it's definitely worth paying attention to what is happening as we approach the old high that was made back in May. The Dow Jones Industrial Average the chart pretty much looks the same where we are approaching the all-time high near this 18,350 level. We're at 18,079 as of this recording here, and the market is still in a bullish pulse. And just like the S&P 500, we have to see how the market reacts around the all-time high. Will the market break above the all-time high and follow through, which means we get further buying, or will the market falter and get rejected from the all-time high? The Nasdaq is hitting the high that was made in the Nasdaq was at 4,562. We are now at 4,543. So we're still in bullish momentum with the Nasdaq, and the market is looking fairly positive. As with the other two indices, we're looking how the market reacts around these all-time highs. And if you're looking at the chart, I've drawn a line that depicts the all-time high and show you how the market is now approaching that old high. And if you're looking at the chart, what it is we call this in technical analysis, market analysis, a channel consolidation, and we're approaching the upper end. The prices are approaching the upper end of the channel. Now, taking a look at the gold market, this is a market of huge interest. We are now approaching on are coming down on the low that was made in gold in March near that 1142 level. This is the cash gold, and we are currently trading at 1146 even in gold. And I have been saying that when investing in gold, you have to be fairly careful, and if you are buying gold, if you're on the buy side of the gold market, you have to be careful and know when to buy. Just because, and this goes to the notion that just because economically you may think that, okay, there is rising debt, there is inflation just around the corner, so I will jump in on gold. That theory has been floating around ever since 2011, and a lot of folks got sucked into buying gold around the 2011-2012 era or region, and that was when the market was at 1800. Now the market is down to 1140. So we have seen quite almost a 30% drop in the gold price. So just because you may have an economic theory, you have to know when to buy. You have to buy at the right point and not just buy because the mainstream media is saying you should buy, or you receive advertisements to buy gold, or you may have a gut feeling that, okay, there's rampant inflation, hence I must buy gold. And what these prices are telling us is that the gold market is still on a decline, and it has been on a decline ever since 2012, and now we're in 2015. There will become a time, I am positive, that the market will turn around and start heading up, and that is the ideal time to buy, when we start to see large players come back into the gold market and start buying the market, and we get a series of higher highs and higher lows on the chart of gold. So that is my advice on gold. It has been my advice for the last 3 years, and folks who have stuck to that advice have done very well, because we are currently making money on gold, but we are making money on gold from the short side, because the market is heading it's in a fairly strong downtrend as of this moment. And when that shift in the market occurs, we'll definitely let you know as investors to say, okay, we believe the market has shifted, and we believe that money is now coming in, and we see confirmation on the chart that the money is coming in, and it now is a time to get involved in the gold market. Okay, so that's my analysis of gold. That's what's happening in the markets. And also of note is the strength in the US dollar this morning after the comments from Yellen, and the US dollar is looks like it wants to approach the high that was made in mid-March near that $100 level on the US dollar stock index. Okay, if you'd like more information on how to receive our market updates, go to smartinvestorcentral.com. On the right hand side, just sign up and you'll get our daily market briefing that will definitely keep you on the right side of the markets. So smartinvestorcentral.com, sign up on the right hand side. Thank you very much for listening, and I hope you have a enjoyable rest of the day.